I do have one question that I'd like to ask, and then I'm going to open it up to the audience. Um, so this is just for all the panelists. I work with a lot of impact measurement folks, and the key challenge that everyone says is, we're collecting all this data, we don't really know how to use it. Um, if there was, what is the most challenging thing in your work about measuring your impact, and how do you actually incorporate that information into your operations? Anyone to start?
One of the things that we've been working on over the last couple of years is actually social impact studies. We've been working with Professor Kapstein. I think he's soon to be moving to Oxford. We started off with a study in Ghana. We did a study in Indonesia. Most recently, we published in Bangladesh a few months ago. And now we've gone back to Africa, and we're looking at 3 additional countries to complement the past work on Ghana. And it's been a fascinating experience. We're getting quite a lot of recognition for breaking new ground, because this isn't just looking at one piece, it's looking at the total impact of our whole business. Without getting into too much detail, if I was to summarize what we've been learning about Ghana and Bangladesh, for example, we're talking percentage points of the total country GDP influenced by our presence in the country. We're looking at percentage points between 2 and 4% of employment touched by the activities of our business. And it's, for example, I think in Bangladesh, 24% of the power generated was financed by our activities. And so through these independently commissioned studies, we're starting to see recognition for the role of industry and from business. Very powerful tool. It does help us have a communication with the government. And it does help us infer from other countries that we haven't studied that we do have a very positive impact through our activities. It's been a really fascinating experience.
Okay. Other thoughts? Yeah.
So, as mentioned by Mark, we do also actually engage with, partner with various agencies, research agencies within India as well as overseas to actually study the impacts. So how do we measure the impacts? Basically, we are more of a commercial organization in terms of we do services on behalf of the banks. We go open the accounts, we deploy our agents, and they do the transactions. So what we do is basically in terms of the mechanism, what we see. One, we see it in the business mechanism, wherein a commercial thing, wherein we see what is the impact in terms of all the stakeholders. So we see 4 stakeholders into our system. One as a business for the company, then 2 to our principals, which is the bank. The third is the agents, which are the bandhus, and the fourth is the customers. So the studies which are involved are primarily where research organizations, we try to see the impact more primarily with respect to the customers, the end customers. So in terms of the impact, there are various programs which methodologies we try with various organizations. One which we did with the IFC was based on the RCT model. But what we see is that in this type of model, by the time the impact is studied, there is a lot of change in the business dynamics. So by the time the research results come out, we would have actually crossed the path with the study report. So that's one of the major challenges which we see in carrying out the impact thing.
Okay, honestly, we do not have one structured methodology on measuring impact in inclusive business. The only point that we have is a research that proves that on our microcredit operation specifically, we are promoting and stimulating our clients to create more jobs on the average of 4 new jobs for each 3 times renewed operation. We're saying that you start your operation, you renew the operation from the third for 3 times, and during this period, at the average, we stimulate the creation of 4 new jobs on the average, but we have much more to do on it in terms of quality of life, education of the family, as we have 70% of clients are women. So the better quality, the better education for women. So lots of things to do. This is one of our challenges.
Okay. Well, why don't we open it up for questions? Yeah. Yeah, sure. Sorry, could you also introduce yourself, just your name and organization?
This is Dalia Abdel Aziz from Arab African Islamic Bank Egypt.
Yeah.
My question for you, do you work with banks or with PayPal?
So we are an alternate banking channel. In sense, we work on behalf of the banks. So we are not a bank.
Not work without a bank.
Yeah, we cannot work without a bank. So this is as per the guidelines. So in 2006, the Central Bank of India had come out with the guidelines where the banks need not have a physical branch, the brick and mortar branch. So if you see in the in India, there are around 600,000 villages, which had only 30,000 branches, which were servicing 600 villages. But on the once the BC model came in, there are around 271,000 branches or locations where the customers can go transact, out of which 221,000 is being provided by the BC model itself. So that has a big impact.
My other question is for Mark and Carlos. I really appreciate the fact that you are into microfinance. I work in a bank. But as you make your presentation, it's very much obvious that it is like a lip service. It's a heavy thing. I mean, if you compare your portfolio in SMEs, it's $12 billion compared to $120 million in microfinance. And for Carlos, you talked about how are you going to scale or to get into microfinance. It's acquiring a company organically, but it seems like it's heavy for banks. And I know it is. And when I talk to bankers, I was just talking to Mr. Yunus. If it is profitable, if it's about quick turnover, it's about risk management, low default rates, why isn't it that bankers who really crave for profit go there? I mean, if we're talking about wealth management, it's like this. Why is the bottom of the pyramid not appealing for banks?
I think just to address a couple of things. I mean, in 2000 and I think it was 2007, we made a commitment at CGI to support microfinance, but by not becoming a microfinancier. So we made a commitment to lend and facilitate funding for microfinance companies up to $500 million. As of a few months ago, we just passed $1 billion. So what we feel our role is, because one of our biggest businesses is bank-to-bank, institutional banking, we've been able to use our balance sheet to support microfinance because we don't have the distribution channels in many of our markets. So we leverage our capacity to fund these guys, and then they use their capacity to reach out. On the SME side, we have a very substantial business. We have $20 billion plus of SME loans and advances. Typically, because it's short-term, it's renewable on an annual basis. So
my take on that
yeah.
is that you need a special infrastructure if a traditional bank wants to go to microfinance that you might not normally have.
I think it's quite hard for a commercial bank, particularly commercial banks that are regulated by regulators that expect certain risk parameters, risk controls, suddenly to find a way to reach out to 65 million people. The Indian government, for example, we've got a 150-year history in India, but they've allowed us 100 plus branches. I can't reach out with 100 branches to 65 million.
That's not readily available for banks.
Well, things change. Our approach has been to support the microfinance industry, which we believe to be an engine for growth, by supporting the industry as a banker to the industry. That's our approach. And I think some companies, maybe like Santander, have actually developed a model which is a microcredit solution. We all have to choose our own models, but we're very committed to the SME business, which is why I'm here and why we'll make a commitment next week to turn the dial up on our SME business, because governments really want to see banks reaching out into that sector. We haven't really seen, one thing maybe you could comment, we haven't really seen a necessary evolution from the recipients of microfinance loans suddenly becoming SMEs and suddenly becoming middle market. That's something I met the IFC a couple of days ago in Washington, and they don't see that chain yet. And that's an interesting thing for us to be all studying.
So I just met the IFC with the same message. So yeah, yeah, that's right. Yeah, to be microfinance and SMEs, and yeah, that's the IFC speech. So I would tell you that the traditional bank, is one model that will not change in the next years. It's a traditional model of mainly in retail. Okay, branches, costs of branches, managers. It will not change for the next years. No. And also, second is, I think that we cannot wait for the change, because this change, I don't know if it will happen. What we are learning in the bank is the opposite side, is that our microcredit operation is confronting the retail business on client satisfaction, because our clients in microcredit are more satisfied, than the clients on the retail. So this is we're talking about clients. So this is a strong conversation, the strong point. And third, I think that when we compare the microcredit portfolio and inside the bank, I think this is not fair, because the point is not to reach the microcredit portfolio as bigger than the other portfolio. I think that is not the point. The point is that to scale up microcredit, and despite of the traditional model of the bank, which is profitable in some terms, but microcredit is profitable too, and the satisfaction of our clients is better than the retail. And this is confronting us, pushing us on the retail side on how to change some things or some products on the retail, based on our microcredit experience.
Is the default rate zero? Because this is what I read, compared to commercial loan default rate of 13%. Is that true?
Yeah, that's true, and it is better. It is better than the retail.
It's perfect business sense.
So,
Well, anyway, I'll talk to you later.
Yeah, sorry, I think we're almost out of time. Maybe one last question. Yeah,
Maybe,
at the
yeah.
back there. Yeah.
Hi, I'm Rupali Kamath from Infosys Technologies. I'm not sure if you touched upon this, maybe you're already doing it, but do you also use your leverage to influence your clients in ensuring that they are using the money more socially responsible, and making sure that they're looking at environmental impacts as you provide project finance, adopting greater principles for one, like that? Is that something?
Yeah, can I start? Yeah. So yes, I think that again, I think it's not a good comparison, project finance to microcredit. Okay, we cannot compare it. It's a very, very different worlds. Yes, what we have in microcredit is one specific social and environmental policy. In Brazil, environment is an issue, but we have in this segment of the society for microcredit is more than the environment, is a non-legal companies or pirate products. I don't know if the name is pirate products.
Yeah, close enough.
Yeah, pirate products selling in the shops. So when you visit, and to be honest, go to the field. Okay, when you go to the field, you find a shop, and on this shop, the women are selling clothes, are selling food, and selling pirate DVDs. So, will you finance this woman? Yes or not? That's the reality of the field. It's very beautiful to discuss it inside this room, but that's the reality of the field. So what is our decision? If the pirate products, represents more than 2% of the total income of that company, we will not finance. But the point is not to say no. The point is to talk to this business women and raise the awareness about the consequences of this kind of products. So that's one example.
I mean, I'll take it to the other side. I mean, you talked about Equator Principles. Yes, we're a subscriber to the Equator Principles, and we're talking the big ticket stuff here, and very much so. We also are a subscriber to being very public with what we will and won't do. So we have 14 position statements, soon to be 19. They are revised over time, but basically we put those out on our website, and you're free to go and have a look at those. And through that, we train our staff to be all credit decisions are factored against whether they conform with these position statements. And that gives clarity to our customers and our staff about what we will, the boundaries. But it doesn't I'll give you an example. It doesn't necessarily mean we say no all the time. Let's say we had a forestry client that we've been banking for 30, 40 years, but we find out that their practices are not world class and they do not meet our expectations or our standards. If, for example, we just therefore exited and another bank suddenly banks them and they continue their practices, nothing has improved in the world. So we have a phrase complementing our Here for Good brand promise, a force for good. So we will impose a program with the client if they are willing to move to world-class standards over a defined period of time, and we will help drive positive progress in that industry, which we actually call in our organization Force for Good. And we believe that is active participation, and that will improve sustainable economic growth, which is why we don't talk about economic growth, but sustainable economic growth.
Jad, do you have anything to? Okay, great. Well, I'm going to ask for a final comment from each of the panelists, and let's maybe 30 seconds, quick answer. Since BCTA is about building partnerships and collaboration, what is the one partnership that you would like to build over the next few years that you think will actually help you achieve that type of scale? Anyone to start?
I would like to help on decide what kind of option I should decide to scale up the operation.
Difficult question. I think in the world of collaboration, there won't be one partner. What we are looking to do is actually leverage the talent within our organization. And so the partnership with our staff and using their skills to help our clients and potential clients and non-clients, I think that's something that we're looking to do.
Yeah, what we would like to do is basically the learnings, what we have learned. I think we would like to collaborate with the various agencies across the world and actually share our experiences, because I think we have invested as a company a lot for nearly 6 to 7 years. There's a lot of learnings which we would like to collaborate with our various partners and provide them this. So we will look out for such partners.
Great. Well, please join me in thanking the panelists. And also thank you to BCTA for inviting us and for a great session. Thank you all.
Thanks.
Thank you.
Thanks.